Alright guys, welcome back to the video. So clearly you know what this video is about because you saw the thumbnail, which is we sold MSTY and we sold CONY. Now, we did profit on both. I saw the writing on the wall. I probably should have got out earlier, but during the last big market pullback, I watched it drop like crazy. And I realized that it was falling way more than the market was. And since these funds don't recover as fast, I knew that I had to watch, and if there was a bounce the next day, sell to get out, which is exactly what I did. Now, it did go a little higher after I sold, so I definitely didn't get out at the best point, but bird in the hand versus two in the bush. If you're staying in profit and you need to get out of a position, get out. Now, we did profit on both these positions. I do want to explain that. We are in the green on both of them. But on top of that, we spent all the dividends, and on top of that, and what a lot of people don't realize is you can tax loss harvest this. We got a nice tax bill this year. That's going to help. And we may be looking to chop some more Yieldmax funds next year to offset taxes. We will see which ones start dropping. But those you don't know, Yieldmax assets, no matter what they tell you, are depreciating assets. Okay, over time, the amount they pay out is usually more than they're making at different points in time. You can have sweetheart stocks that run up and hide it. Like right now, Hui and Platy are the ones that are doing it. They're hiding it. Nvidia does it back and forth, but that's only because Nvidia has such a big market cap. I have YMAG, and it's not terrible, but it's not great either. So with all that said, as long as you guys all understand this is a depreciating asset, we went into it with our eyes completely open. Let's get into the numbers. And I will show you how we profited, how much we got out for, and where we're at with these positions. All right, so let's go through CONY first. So our cost on CONY, we paid $21,539.25 for our shares. Now this is my wife Melissa's portfolio and mine. Now on dividend, we collected $16,229.31. Now, it's important for you to understand, we just took those dividends basically out. We did do a little bit of reinvesting in safer assets, but generally we were living off that for this year, which puts us in a much different spot than, say, somebody who was putting these dividends back in and reinvesting. So their losses would have been compounded versus ours, where you have to accept that we spent that money. We did something with that money, so we did get value back out of the fund. Now, when I sold at $7,752.40. That would have been more like $5,000 if I had done it during the market drop. I just held on and got up the next day and it bounced and I got out. Now, we also had sold options and calls, like sold puts and calls to acquire these shares, and then sold a few calls on them a couple times to make some extra cash. So I made $1,810 off options premium. So that comes out to a total of $25,791.71. So that gives you a real world look at what we got out of the fund, you know, from buying in to out. So we profited $4,252.46. Now, since we did not exit any of the positions with options, we are allowed to tax loss harvest these. So we can put this against some of the dividends we made this year and some of the capital gains to offset the cost and lower our tax burden. So we're profiting there too. Now, is it perfect? No. But when you think that it is November and we've been basically taking this money out since before January, so you could almost say we got a year out of this fund that we got to live off of it. So there is some value that has to be taken in there. You know, it paid our bills, it paid for our vacation. So you can't just be like you lost all that money. No, we took the money out and spent it. So, you know, I can't really point the finger at Yieldmax, even though I do think they do a poor job of handling their portfolios. But they're doing what they say they're going to do, which is create yield that you can spend, which is exactly what I did. So, okay, so when we go to MSTY, we profited a little more. So the cost on that was $42,680.96. That's what it cost me and my wife for all of our shares of MSTY. Now, in dividends, we collected $37,151.49. So we spent that. We almost got all of our money back and spent it, okay? I need you guys to understand that, because the people that took this money just kept reinvesting it, and it keep running down the hill. When they sell, they can't sit there and go, well, we took $37,000 out. Now, when I sold it, I got $13,274 out of it. I ended up moving most of that money over to Neos, and now it's going to pay us a healthy dividend, and the NAV will not decline. Now, we also did sell some puts and some calls. So the premium from that is $1,558. Now that totals out to $51,983.80. So if you take that against the cost, we profited $9,302.84. Now, we have to talk about the overall picture here, because I would love to make this a complain about Yieldmax video, but we can't do that. So the reality is, it's not Yieldmax's fault. First of all, we knew they were depreciating assets when we got into them. They were used to get us basically semi-retired now, to give us the money to live and do the things we wanted to do, while we worked the portfolio to a safer return. All right, things with less NAV erosion, which is exactly what we did. Now, I think it's important that, once again, everybody understands what sweetheart stocks are. So right now, CONY and MSTY are Yieldmax's sweetheart stocks. When stocks get momentum behind them, they will run up. All right? And then it hides the NAV erosion because the premium and the volatility runs up, and they make money. And then the share price can go up at times, even though they're not making money. So when they pull, say, $1 out to pay you, if the share price went up $1, but they lost like 10 cents on their trades, it doesn't look like NAV erosion. So you do have to be careful. You do have to watch. I do have other Yieldmax positions, and they do have lines that if they cross them, we're selling them. I'd like to wait till next year to tax loss harvest some of them as we transition the money over into safer assets. Am I mad about it? I don't like it. But no, I'm not mad about it, because I took that money out and spent it like a paycheck. If I had reinvested all that, I'd probably be really mad about it, honestly. I do think that there's an opportunity to use these funds to build wealth. I think you have to monitor your portfolio continuously. I think you have to learn some hard lessons about ripping off the Band-Aid, shutting it down, and selling to get out before it gets any worse. And I think you can't worry about if they bounce back in the future, because I don't think CONY will ever bounce back. I'll be honest with you guys. MSTY, maybe. I wouldn't bet on it. And I think it'll reverse split before it happens. And the problem is, as soon as you go through a reverse split, even though it's a paperwork change, people don't like it. People sell. The AUM goes down. They've got less money to work with, which means less premium. It's just the way it goes. Now, I am not unhappy with getting out for a profit, but I blame myself for not getting out sooner, because I really thought that it would start recovering with the market. But I think MSTR, as its underlying, and Coinbase as underlying, are becoming very profitable to short. All right. I think that all you have to do is go look at the puts on it. And I think that everybody's just shorting the heck out of these companies. And I don't think they have strong financials. And I think that at the end of the day, they've just fallen out of favor with all the momentum traders. All right. There's not enough call premium. There's not enough upward momentum to drive them. There's not enough buying momentum. Okay. Now, if I was to ask any of you, and I'd love to hear down in the comments, what position is on the chopping block in your portfolio, what would you say? Let me know down in the comments what's on your chopping block. I'll be honest right now, I have no interest in selling YMAG, because if you go look at like the last 6 months to a year, it actually has not been doing terrible in total return. The latest dip in NVIDIA has me having it on the chopping block, and I only have like 150 shares and like 100 shares of CONY and MSTY, so those positions aren't enough to make any big deal. That said, I kind of wanted to talk about the 4 funds that we're really building up to be like are pillars in our account, and that would be T-SPY by Tap Alpha, TDAC by Tap Alpha, and Neos putting out SPYI and QQQI. The reasoning is tax efficiency. It's just as simple as that. They do a lot of return of capital, the constructive kind. Their NAV holds pretty good. And all four of them do the indexed options, which is a 1256 contract tax treatment, which essentially means from the day you buy it, it's 60-40 split on short-term, like long-term and short-term capital gains. Whereas the rest of these are just short-term. So you could say, because they've been doing 90% return of capital on the Neos funds, that you pay less than 10% of your actual dividends at 60-40 split. So honestly, until you complete your return of capital, you probably could go like 8 or 10 years and pay almost nothing in taxes. Literally, it'd be very, very, very little in taxes. So that's why we're making those the lion's share of our portfolio now. But I'd love to hear down in the comments what you're buying. And with that said, don't stress it. If you've got to exit positions, don't be afraid to do it, because you may cut the bleeding before it gets worse. And that is a great feeling, because I love the fact that we got out green on these. But, you know, we had hoped it would go slower, but they fell so hard so fast. You cannot hold on to a falling knife like that. You have to get out, no matter how profitable it seems on the dividends. Don't get starry-eyed, guys. You have to look at total return. But with that said, if you haven't already, go down, hit subscribe, hit the notification bell so you see all of our upcoming videos. Give us a like. Let me know in the comments what you think. What are you buying? And I'll see you in the next one.